I will represent myself as a moderator and also a participant of this interesting discussion. I will represent Tech Minsk accelerator program, which is based in Minsk. So usually startups pitch investors, but this time we'll do vice versa. So investors and representatives of accelerators will pitch you guys, and so be proactive, ask your questions. But let's start with a small presentation of organization or fund you represent, your goals and focus, etc. Everything what could be useful for our audience. I could start with myself. So Tech Minsk Accelerator School is a 1-month intensive program which we organize and deliver at Guru Startup Hub. Usually we do 2-3 batches per year. In summertime, this is 1-week accelerator program. We guarantee pivoting and growth hacking for early stage startups which participate in our program. And this program is international, so most of the classes are delivered in English, and also international teams are usually studied in this accelerator school. The latest one, the recent one, batch, which was delivered in February, we hosted teams from India, from Finland, as well as from Belarus. That keeps our Belarus startups think globally, speak English, and develop their startups very rapidly. What else could we describe our Tech Minsk? So actually more information is available at Guru Startup Hub and on our website. So let's go on with other presentations. Interviews. Okay, thanks.
Okay, Saulis Vacevičius. I represent Meta Group. It's an integrated investment group that consists of one is advisory business. I've mainly been working with the European Commission and similar organizations regarding the various assessments of innovation and similar policies. And another pillar of our business is venture capital business. In that regard, we have Meta Zernica Ventures. It's an European venture capital company. So the main focus of our group is really to work with the so-called public research institutions and various collaboration types of universities. So that's their core idea, to work with those really very, very tangible situations when you need a lot of stuff, like, for instance, equipment, involvement of university laboratories, etc., etc.
Hey guys, I'm Rokas. I represent Startup Highway, which is seed and pre-seed stage venture capital fund, and also BEL.BIZ Tech Park, which will be 800 working places startup hub, which opens in July, August this year in Vilnius. So basically, our main focus is to catch young and proactive teams which can execute MVP and in early and really early stage, and to see if they're capable to create MVP and to see some seeds of potential business model. And if you comply that, we can speak to you and you get our money and start working with us.
Hi, my name is Ardas, and I'm an investment manager at Practical Capital and the CEO at Startup LT. Practical Capital is 24 million euro venture capital fund in Lithuania. We do from pre-seed to expansion stage companies, investments in companies, and our kind of sweet spot is a team of 3 people with an MVP, and we can invest to up to 200,000 euro in this seed stage and bring the company to like 20 people and get help to get a proof of concept and leave our nest to UK or US, or like we have some successful cases, and we don't stay until more than Series A with the company because we cannot help them anymore. 38 investments so far, 2 Series A, Trafi and the TransferGo, 1 company positioning for Series B, 3 companies for Series A. So far so good, considering 38 investments, like 10 success stories. And we have started with the accelerator, which is not batch-based. It is custom tailor-made program for mostly B2B startups on getting proof of concept for an MVP and then building a product further on and getting the first kind of revenue flowing in. And GB is doing his great job and his outbound sales process. And we accelerate up to 5 companies, very highly selective, and one of them, CG Trader, is number 1 3D model marketplace at the moment by stock globally. So that's our most success story. Yeah, come speak to us.
Okay. So hi, my name is Gary Stewart. I represent Wayra. Wayra is backed by Telefonica. Telefonica, I think, is the 5th largest telecommunications company in the world, so it's kind of like AT&T or Verizon. Telefonica started Wayra about 4 or 5 years ago because it realized that there were companies like Skype and WhatsApp that were kind of taking away entire business lines. So the idea was to deploy some of the money that Telefonica has. It's a company that has, I think, about 50 billion euros in revenue per year to actually invest in startups. We've committed a total of about 500 million to open innovation more generally. One of the programs is Wayra, which means that we have 12 academies in 10 countries around the world. Startups usually tend to stay with us in the accelerator space for about 10 to 12 months. We invest between 40,000 euros is the average, but we've gone up to as much as like 150, depending on the stage of the company. Companies come to us for the cash, because of the mentor network that we have, but also if they want access to the 300 million customers that Telefonica has around the world. So a lot of times we have a dedicated person whose job is to focus on business development, looking for opportunities between Telefonica and the startups. In the case of the UK, which is the academy that I run, our startups have raised about $75 million over the last couple of years. They've generated about $6 or $7 million in contracts with Telefonica, which have come from about 60 different pilots. So in general, the idea is to help startups to scale and grow using Telefonica's resources as gasoline, I guess.
Hello, my name is Tanya and I represent Almaz Capital. It's a venture fund with offices in Moscow and in Silicon Valley. We invest in a little bit later stage companies than my colleagues here, so we mostly do A and B rounds. We invest in IT companies. Among our interests are cybersecurity, fintech, also big data, machine learning, and all other high-tech spheres. So our main idea is to invest in companies from Eastern Europe and CIS and Russia and help those companies go global. So we have a very good team in the United States that helps those companies to accelerate their growth there, and we have great advisory board. So that's the main idea. It's to make a bridge from developing countries in Eastern Europe to the global markets, starting with United States markets because it's usually the largest one. So everyone here is very welcome to share their startups with us, and we would love to consider investing.
Thank you very much. So we have here the representatives of both accelerators and funds. But what is the main difference between those organizations? Like, as far as we understood, like accelerators are more interested in early stage startups, but funds, venture capital funds, are more interested in late stage startups. Is it the only one difference? How we could dig deeper, probably, in this case?
Well, I
What
would
could
think
you
that
describe?
it really depends on the accelerator in question and the geography in question. It's not the case that, for example, we don't look at companies that are just ideas on paper. Usually they need to have some traction to be able to get into our... We have companies that have raised millions of pounds that come in because they want access to Telefonica, and they realize that they couldn't do it without being in the program and having that direct access. So I would think that it is correct to say that originally the idea of an accelerator was probably kind of the Y Combinator model, which was 3 months over your summer break from Stanford or something like that. But I think now you have a lot of different models of accelerators. And even in the UK, you have companies like Seed Camp saying that they're no longer an accelerator, now they're a fund, and you see that happening more generally. So I would say the point is to kind of just do your research and just kind of make sure that you understand who the person is that's going to be, the institution is that's going to be investing in you, what is their track record, and what are the criteria that they have for selection.
Yeah, I would just add that accelerator and VC is completely different businesses. Like, you know, you cannot
Compare.
yeah, you cannot compare it because accelerator is very, very capital intensive, not capital resource intensive business, right? You need to run quite a big staff because it's early stage ideas. You need to put a lot of mentors in place to be able to shape your teams and help them grow. I mean, you cannot have a zero touch business model with 3 or 5 partners and kind of, you know, supervising very strong teams and investing and backing very strong teams. And usually the guys funding accelerators, like in US, are the VCs that see it as a source of pipeline and getting the first hand into the good companies that they see. That's how Y Combinator was established, and a lot of European accelerators as well. You have to understand that accelerator is not a profitable business by itself. Only some of them are profitable, and because VCs are able to kind of capitalize on the growth on higher up the J curve, right? So all the companies are being like, they're dead mostly in accelerator, and you invest only the good ones, and that's how you actually get the return. There's not many profitable accelerators, and without like kind of you know, huge corporate guy that is investing in innovation, it's really hard to run a profitable accelerator. That's why for our case we highly select the teams and we don't do batches. For some teams that are maybe able to source globally, like Rockstar here in the Netherlands, like you guys like at Vera and US guys that are able to you know, offer them, have some success stories, offer a good VC investments, and then can have a very good founders come in, not first, maybe second time founders coming in with great ideas and back them up and connect them to VCs. That will actually earn the most of the money. So I would say that there is not so much money accelerator, it's a different model, and it's very important to the VCs. And because there is not so much money, most of accelerators raise the VC, like seed fund on top of them, or switch to incubator, like completely incubation model. That's at least what we see it in.
Okay, thank you very much.
So the only thing I was going to kind of, I agree with almost everything you say. The only thing that I would just disagree with is I think that we shouldn't mythologize venture capitalists either, because the majority of venture capitalists also are not profitable. So I think that it's something as if you only have a handful of VCs that are profitable. I think everyone that's involved in investing in startups, the majority of people don't make a lot of money from it. Everyone is trying to find that one company that's going to be the next Facebook or the next Google or the next company that's going to be able to, when they sell it, make them a lot of money, which I think is also an important tip for you guys, that when you're pitching to any sort of investor, whether it be an accelerator or a VC, you need to understand that their model is that they expect 90% of you to basically die or not ever make them any amount of money, but they're looking for each company to be that potential billion-dollar company.
Thank you very much. Tatiana, do you cooperate in Russia with accelerators, and probably you could describe some accelerators in Russia, like a very neighboring country to us?
Yeah, of course we do cooperate with them. We like to look at all their batches, and we come to their demo days always. So that's a good source of pipeline for us. I also can mention another difference between accelerators and funds, that usually accelerators focus on very early stages and they don't really help the company during their life cycle. Well, at least in Russia they don't. So usually a venture fund, if it comes into the company, it stays till the end and helps the company till the exit. So we usually do follow-on rounds, and we keep our share in the company, at least pro rata. Usually, sometimes we increase our shares in the company, and usually we get the board seat. So one of our partners is a board member, and we can contribute to the development of the company. Speaking about accelerators in Russia, there are not that many of them. For example, the largest one, maybe someone have heard about, is called FREE or IDF. So it's an institutional accelerator that helps company in the very early stages. So they already accelerated more than 200 startups. So it's the largest one in Russia, but it's very positive traction in not only in Russia but in other countries in Eastern Europe and CIS, that more and more accelerators appear, and some of them are very good quality. So I think I can say for all funds that we like to cooperate with them.
Okay, thank you very much. So let's ask the audience. Do you have questions to investors or accelerators? Okay, let's start.
What do you have to know to start working with accelerators?
Probably you should have an idea at least. For Tech Minsk is enough. It's enough because we help even to create and organize team at Tech Minsk. We work with early stage startups. What about Rokas?
For us, it's natural that you have a team which can execute the MVP you are speaking of, and if it's okay, then we'll escalate the main topic. Is it possible to make business from your idea? And if it's compliant that, we can speak about investment and work hands-on with your team.
Okay, Gary.
I mean, it's a good topic, and we could discuss for hours. But in general, you have to know what this accelerator is that you want. You cannot approach every accelerator because they're very, very different. And in most cases, like Seed Camp, the first thing they give you to read is the book called Non-Test, right? So you have to understand, you have to assess yourself whether you are ready for accelerator, and you have to know what is offering. Is it like kind of ideation, like pushing you to speak to mentors, to corporates, try to sell it? Is it more like technical that helps to kind of shape and build your product? Or is it like, are you ready to go into sales program? Are you ready to kind of go and be shaped in that sense? So if you have like an idea and no MVP, maybe you just do some small research, understand if it's viable, talk. All the accelerators are traveling around. They are everywhere in all events. Bounce your ideas for the scouts, and then once you see traction, they pick up your idea, you choose the right accelerator and you apply for it. So then you know always where you're heading. It's like the same as building a startup. And you have to understand that accelerators are scouting. I mean, you're as important to any accelerator or VC fund as the VC fund is to you. So just do your homework and then pick the right partner for that will help you to go to the next stage.
Yes, I'd like to back my colleague because really there are many types of accelerators, maybe still not the case, say, in the Baltic countries, Poland, etc., but for sure you have like ICT accelerators, some kind of private ones, but also you should take attention that those kind of really very powerful accelerators existing somewhere nearby, say, universities, and it's really quite different stuff. If you really say from, I don't know, physics, from life science, for sure you should take care about those kind of university-based accelerators, but for sure if it's ICT, you really can work with different types. But we really too much emphasize this kind of differences, discrepancies, and so on and so on. For sure there is some kind of ideal system we can discuss, but also there are a lot of specialties in every case. There is no, say, how to say, single line where we can really find all answers. It's like you pick up, you check whether it's okay with you or not, then you go another round, etc., etc. There are not so easy answers.
Yeah, I can add that you must know one thing, all of us, a lack of pipeline. So basically we need new ideas and we need you to approach
Good
us.
to know. Yes, Gary?
So I mean, I think that for us, it's pretty much the same thing everyone else is saying. The only thing I would add is we usually want to see an MVP because we think these days it's so easy to do an MVP. And as we said, early stage investment is so high risk that if the person hasn't even bothered to kind of come up with a minimum viable product and then to at least do some initial tests, then it probably means that it's not for us. So we do want to see this kind of the effort being made to kind of do the MVP. And then I would say that in addition to kind of team, what we kind of also want people to be able to answer is what makes you special. Because the thing is, if you're scouting for startups all the time, you're going to be seeing hundreds or thousands of startups. And most of them are just going to, you're just going to hear like blah, 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 blah. What you're really looking for is a startup that's able to explain to you why they have some sort of unique insight that other competitors or other people in the market don't have. So I think that being able to have a really compelling pitch that answers the question, what makes you special, what is your secret sauce, and how are you going to be able to defend it and execute it well, those are probably the things that we look for. And the other thing is that when you're pitching, what really matters a lot of times is the passion that you have when you're conveying the idea. Because if you look bored when you're telling me your idea, I'm definitely going to be bored. So the thing is, you need to kind of be contagious in the sense that you can convince me that this is a really amazing idea and I'd be stupid not to want to get on board with it. So sometimes even if we see the idea is completely crazy and the person doesn't have an MVP, if the entrepreneur is able to just really sell the vision, then that can also be pretty compelling.
Great, thank you very much. Your question, please. Yes?
Okay, the question is about, you said that even later stages investments are pretty risky. Could you tell us about the statistics of the best venture funds and middle venture funds? For example, you have 10 startups on the Series A round, and you put in them $1 million per 20 person each. What kind of output do you expect to get, for the best funds and for the middle funds?
I think I could answer that. If you look at best United States funds, you can find that many of them has several unicorns in their portfolio. You don't usually find those in at least not several of them in many European funds, but still usually, as it was already said, the funds aim to have at least one company that will pay off the fund, all the investments, but of course we're looking at each of them as to have a potential at least to become a brilliant story. But usually several companies usually die in the portfolio. Several returns investments, but not much profit over it. And about 2-3 companies are usually bigger exits. So the idea is that, of course, you want to make 1,000x in them, but to have at least one company with 10x is already pretty good. For example, if you invest 1 million in 10 companies and one of them makes an exit that will bring you 100 million, then at least you won't lose the money of your investors. So that's what funds usually think about.
Okay, Saulius?
10 startups, that's one unicorn, which is 100 billion and over, maybe 5 something like break-even and several banks.
Well, that's the most usual case, I think, yes. Of course, we want all of them to be unicorns.
Okay, maybe let me add one thing. It's really good to talk about unicorns, deca-unicorns, but what is the idea, say, of incubation, acceleration? Incubation is really about your self-assessment, whether you're a good businessman or not. Maybe you could be a good researcher and you can really continue and then produce quite good results. There is maybe for you no need to go and to start to produce the kind of business entities. That's why it's really very good for your how to say future to go through the process, through the incubation, to the acceleration, in order not to start to produce, this kind of mistakes in future. Because you can imagine what does it mean unicorn? I don't know, it's 1 out of the 10, not it's 1 out of the 100, out of the 10, etc., etc. That's my suggestion would be really just to go through the incubation and acceleration through the self-assessment process. Again, maybe you could be much better researcher than, say, businessman. That's also really very important to understand.
Okay, Ken?
I think there's one important thing that we as entrepreneurs need to remember as well is that the VCs are typically kind of a service provider, that you are managing somebody else's money, and you were just mentioning that's how you pay back your fund. So in the same way that you have some questions that you usually fire, secret sauce, team, who's the rock star, all that, we have the same kind of questions for you. It's like, what's the lifetime of your fund? What's your track record? Can you point me to some of your failures? Some of the people I can talk to? How much of your fund has already been deployed? What's your usual follow-on if you do follow-ons? All of these kind of questions. Because if you're in a 10-year fund and you're already 7 years in, you're not going to make any more investments. So if you ask that question at your first meeting with one of the managers and he says, oh, we're 7 years in, you kind of know that you're probably not going to raise money from this fund. So just stop the talks and get out. What are your thoughts on those kind of questions?
Yeah, very interesting point.
Yeah, we do due diligence on all companies, and we actually expect the companies to do the same on us, so they would know who are they getting their money from. So you're completely right about the lifetime of the fund. Usually the first 4 years are active investments, and after that it's only follow-on rounds, and we're looking for exits already. So yeah, it's most likely that a 7-year-old fund won't invest anymore. But most funds try to be reputable, so we raise other funds and still invest monies. For example, now we're in our second fund, so probably next year we will raise the third one. That's the goal. But when you come to the investor, don't be afraid to ask the questions. So you might look at our portfolio companies at the website and to investigate what exits do we have, what advisors do we have, and you can always contact some of the portfolio companies and ask them, so does this investor help at all or not? So it works this way, so it's not a secret, so you shouldn't be afraid to ask those questions, always.
I would say that one point that I would go even farther in saying is that, you know, my startup that I had like back when the VC came on, I was only looking at the firm and not the person from the firm who would actually be on my board, and that can be a huge difference because the thing is I just didn't really like the person who was on the board, so that meant that we were going to kind of come to loggerheads at some point. Also the attitude that the firm takes to entrepreneurs, because I think that if the best VC firms to me are the ones where entrepreneurs are the people who are behind the fund or the ones that are on your companies. The ones that are backed by kind of more finance-oriented people that just view you as a kind of alternative asset class, almost as a number, is basically kind of people that I wouldn't want to be in my company, because that means that when things go badly, they're only going to look at you as a number. So I would say try to go even more specific and say, well, who exactly is the person from the fund that's going to be working with me? Do I get along with that person? Do we seem to have the same approach? And do they actually empathize with entrepreneurs? Do they view this only as investing someone else's money?
Yeah, and this due diligence of investor, you have to understand investors also have a boss. It's limited partners, and we are doing the same pitches, and we need like only few limited partners say yes, give us the money and distribute it. And we also do this pitching, very formal, very structured, very different way, more like going with a suit and like fundraising, right? We all go on roadshows, and then when we ask you the same thing, so you have to understand that investors are doing also the same exercise, right? We also manage teams, they also have to create pipeline partnerships and whatnot. And then you know, at least in Lithuania, we're a very, very, very small country and very small ecosystem. So startups usually don't have the luxury to choose the money from. We are the only institutional fund in that sense in investing in early stage, and we always, I mean, you can get intro to any kind of founder from our portfolio by second connection, and that's how you actually, the only thing I could tell you to ask the portfolio companies, what does the fund do when, you know, shit hits the fan? And then when everything is good, everything is nice, you divide attention, but do you get any attention if your startup is failing, or when you see that you know, you have to get some additional money to actually pivot your way out of it? And then does an investor have the patience and the resources to put this money, or can he connect it to the right people, and what would be the outcome? Yeah, that's very, very important. And usually they just see the term sheet with the money and sign, where do I sign? And then, you know, just not reading the agreements and then negotiating after another round, it's terrible. Yeah, so
Can I just add one more point? Something that you just said that reminded me of another thing with my startup. If you think at some point that like your local market is good for seed funding, but it's not enough to do like the Series A or Series B, then you need to make sure that the investor that invests in your company can open some of those doors. Because what happens is a lot of times the investors, like let's say for example, you have a local investor and then all of a sudden you are going to try and raise money in the UK or in the US. If the UK or US investor doesn't know your local investor or doesn't have someone here on the ground that they trust to actually make sure that you don't completely screw it up, they probably are not going to invest in your company. So when you're looking at the local investor, if you have any amount of choice, make sure it's someone that also has the right contacts in other markets where there's more money for the later funding rounds.
In the sense, some of the startups are very arrogant, saying that local investors doesn't understand anything and we must go raise somewhere else. But the problem is if you keep your development team here or a big part of operations here, usually the other fund, UK or Germany and France, would like to have a local partner to invest. So, don't make enemies, like be open to everything and kind of respect local investors. They are not maybe that much, we could be not that much educated as we are learning with our startups and with our failures. And we're only 4 years old fund, right? So, but have this in mind.
Yeah, and if you're looking for like early stage fund, always ask the question, what network the fund can bring to you when you will be making the second round. So always ask about the network that we can provide for you.
Yeah.
Sure, you look after the people working behind the fund. It's really very important. You should assess their, say, networks, how, for instance, they are connected with the business angels community, with the, say the higher level VC funds or the private equity. It's really available information. I think you should really take care of who is running this fund. It's really a very human business.
Thank you very much. Nikita, you have a question.
I have one question about the media. So what do you read about startups to keep, I don't know, to know about the industry, to stay in touch with startups? So where should we publish the articles about us and only you contact us, not we, company? So what do you read? In case you read anything, except
It's important to build a strategy.
we just want to understand what's in your head.
Say, what do you mean? What are it? Say, philosophers, writers?
And mass media.
Mass
To track
media.
startups, best startups.
Good question. There is no time for that, actually. Yes, you tried after all. I don't know. For sure, it's really, again, very, how to say, very personal question. For instance, you have some say, I would say magazines they I like to read, for instance, like Institutional Investors. I don't know, but really, could you clarify your question, actually? Could you clarify your question? Say, what is the reason behind your question?
Just want to understand what's in your head. How do you evaluate the startup? So if my customers, so you are like a customer, so it will be the odds to get the sale will be higher. So I just want to understand how do you evaluate, how the decision.
Yeah, but like in many cases you have like quantified, say, procedures and qualified procedures. For sure you have something really very written. You should proceed with the due diligence, legal matters, etc., etc. There are many questions that you have in your manual. And then for sure there is something like that you whether believe or not believe. It's easy and quite complex question at the same time.
So I would say, like, I don't really read that much of the startup stuff anymore because I think that usually there's too much of a glut. And if you get into TechCrunch, it's usually because you've raised a round, not because you've done something interesting, or it could be because you were at TechCrunch Disrupt and they're promoting you. I think that what we do, and I think even within our accelerator, a lot of the investors do, is we have open office hours where startups that are interested in speaking with us can just simply come to us and pitch. And we can kind of give them our evaluation, and then the best ones we kind of keep in contact with for the next time that we have a round that's open, and the other ones where we can continue just giving them feedback anyway. And a lot of the funds in London do that, so from Index to Accel to whatever, they'll come into the accelerator and they'll just, their younger associates in particular will just spend an entire day just talking to startups and listening to their pitches and giving them feedback, even if the startups are too early for them to invest in. I would say the other place that we kind of get information about good startups is from investors. So sometimes an investor will talk to a startup and say, listen, this startup is too early for me to invest in, but maybe they could be a good candidate for Wayra. So then if it comes referenced by someone that we like or trust, or it can come from Telefonica, a Telefonica employee, then that's another good source. And then the third site is to go to events like this and just kind of see, well, who's there? And if there's a pitching competition, which are the startups that are pitching? What do other people who are here think about these startups? And then maybe begin a relationship that way. So I would say it's not, I think at the very beginning when TechCrunch and those kinds of formats were new, they were actually much more useful in terms of being a way of filtering startups. Now it's just too much information, and the way to do it is just to try and develop relationships with the entrepreneurs or to use references from people that you trust.
I would just add that, you have to understand that VCs like Wellington Partners and other big ones, they get 800 to 1,000 inbound emails a month, right? Their associates are like spammed. They don't read it unless it's from someone that they know. And actually another point is that a lot of funds do outbound, so they reach out, right? If you read in the news, it's too late. The startup is gone probably, unless you are like big name, big shot that can kind of contribute. But what really matters is what you do every day, because we get the recommendations from a startup. We talk to you, he introduced with other guy. You might impress our local partner that you don't even know that is connected with us, and you might be just talking with other investor that will introduce us, getting a referral. So really, it's what you do every day. It matters, and just be doing a great job, and you'll get noticed, because the pipeline, like Rokas mentioned, is the most important thing for a VC. Is a good pipeline, and we have a lot of means how to source for it. And just if you're keeping up the good work and being yourself, you'll get noticed, because that's the only answer.
Like VC's decision to invest is not just pragmatic. For example, for us, we try to, when we speak to startups, we try to have as many competencies as possible when we're speaking with you guys, like marketing, business developments, if it's really a hard technological solution, really good engineer, like then finance guy, like all the competencies decides to invest or not to. It's not just mathematical, where it's like big pragmatic banker sits with money and maybe he read something in TechCrunch.
Just quickly, on that topic, it's really interesting. So Gary mentioned about this, but I would like to hear from everyone else. What do you look in the founder or founding team? It will be super interesting, maybe one or two specific examples where the founder is really, really impressive.
For me, it's capability to complete MVP. Just not to know the idea, but to complete MVP and to know what the second step after completing it will be. That's it. That's for early and real early stage.
Arvidas?
Okay, it's a good question. At least we invest in teams that are pretty much early stage. We invest in non-investable teams and make them investable to the next round. That's our motto in Lithuania. And for us, it's really important. We do tranches. We do like a small tranche in the beginning and see how they can handle it and how well can they develop. It's actually the most important thing is how well can you absorb information and advanced in a fast time. So most of the people that we invest in the beginning, they might be brilliant guys, but they turn into brilliant founders and businessmen. And this is actually the point that we are always looking. Can he handle not only technical side, but the business side? Should he be replaced after seed round by a CEO that we hire, which is a bad thing, or can he become this guy that will lead the company? So this is the kind of thing. And then the founder that impressed is of course the founders from Trafi. This is the most successful company in our portfolio. So they manage, they managed to launch this public transportation app in Vilnius, then managed to launch in Brazil, in Turkey, become #1, beat Move It, and then now is official app of Rio de Janeiro Olympic Games of transportation, beating Apple and other guys. And still the guys of the Series A and working with Octopus and very, very big guys in the entrepreneurial industry, they're still able to lead the company. So this for me is like, wow.
Also, there could be some differences, talking about a ICT company, like he gave really good example, and talking about those kind of the technology companies that use a lot of, say, stuff like like say laboratories, etc., etc. First of all, you should evaluate, say, whether there is some kind of science fiction or there is the technology that really may go further. And again, it's really, you have, say, the VC venture capital funds that really very keen on investing in ICT, but also you have those kind of really been working with those kind of the technology-based companies. And in that respect, this venture capital fund that really has been working with those kind of high technology stuff should have the, say, the proper staff, say the eminent and prominent advisors that could be really able to validate your say technology, say when you buy technology or some kind of photovoltaics, etc., etc. Again, there could be some differences because again, one is going to work with ICT companies, another thing is really to work with those kind of the, say, the tangible technologies like the life science, like the physical science, etc. Could be a slightly different approach.
Tatiana, do you have?
Yeah, I wanted to add that when we look at the founders, one of the things that we want to see is that the founder really understands the market and understands how to build a big company there. So not only doing it because it's fun or because he likes the technology or anything else, but he understands what are the opportunities on the market. Usually we prefer people with experience in the industry so that they know how to sell, who they're going to sell to, and if there is this kind of understanding, then the founder usually understands what does he need the money for and what help he needs, because he also knows all the disadvantages of the market, all the problems there, and that's very important. And the other thing that we usually want to see is the ability of the founder to build the team. So about Series A and Series B stages, usually there's the team more than just the founders. And it's very important that the team would be of high professionals, and there would be all important parts of the team, not only developers, but also sales and marketing and product managers. So if the founder knows how to build the team, how to motivate it, it's a very good sign for investors.
Thank you very much. I see that you have a lot of questions, but we should go on according to our schedule. But I should say that all our guests will be available tonight at Masquerade Party, so keep your questions in mind, and we will have a chance to communicate more and ask your questions during today after party and masquerade style party. So thank you very much for coming, for sharing with us your knowledge and with interesting points. Thank you, audience, and we should go on.